one U.S. housing investor lost close to $1 billion in the third quarter of 2022. And according to the article that me and you are going to go through today, Opendoor lost $928 million. But before we go through it, my name is Boris. I'm a local real estate agent in Southwest Florida, and I operate here anywhere from Marco Island all the way up to North Fort Myers. If you're on the market buying or selling real estate, you might be thinking of making a move in the next few months or years, please contact me. My website is www.homesbyborisfl.com. According to this article, the real estate market changed quickly as the Fed raised interest rates, and Opendoor CEO blamed that once in 40 years market transition for its $928 million loss. Now, first, I want to just plug in real quick that the U.S. mortgage rates really depend mostly on the 10-year Treasury yield than what the federal funds rate is. The most important part of this article is pretty much into this one sentence. According to Inman News, Opendoor said that $573 million of its net loss, about 62%, was due to lowering home values in its inventory. Excluding this forward-looking adjustment, adjusted net loss was only $328 million compared to only $18 million a year ago. So they lost massive amount of money, which was realized loss of $328 million. But the other 62% was forward-looking adjustment, where they adjusted the values of the homes they still have in their inventory on their balance sheet. They haven't sold those homes. If you live in one of those markets where Opendoor did a lot of business, you might be seeing the property values drop even further, as I think Opendoor might be forced to sell those homes, just like Zillow Offers had to close their doors. So Opendoor's metrics are in the danger zone, and they're very close to where Zillow was in its worst moments, according to Mike from the University of Colorado Boulder. Some observers also see similarities to Zillow Offers, the Zillow iBuyer program that closed earlier this year. This is all according from this. This is all from this article. I'm not making this stuff up. Now, maybe you don't know, but Opendoor picked up a lot of the Zillow Offers inventory back in January when they were forced to close. But now, if Opendoor is forced to close just like Zillow Offers did, who will pick up that inventory? Would there be a buyer for that if they need to kind of sell it and get rid of it in a fire sale fashion? So that's where the risk lies. And that is the biggest question, in my opinion. Where and what will happen if just that one investor needs to unload all that inventory in the markets that they operated? But how about all the other smaller investors that did just about the same thing in 2020, in 2021? So I believe that's where the real risk is. And what will happen if all these investors suddenly are forced to put all that inventory in the market, not just forward adjust it? So that's all I have for you today. You guys enjoy your day. It's beautiful weather down here in Southwest Florida. The temperature is just coming down a little bit, but it's nice and sunny. And we're going to have amazing time this next week with Thanksgiving coming. You all enjoy the holidays, and I'll talk to you soon. Have a good one. Bye.